lawmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning and welcome to The Pulse. I'm Tom McKenzie in London. So the French Prime Minister Sebastien Lecornu has resigned just hours after his cabinet was unveiled. Let's get more then from Bloomberg's Caroline Cornat on the ground for us in Paris. Caroline, do we know the reasons for the resignation of the French Prime Minister?
Clearly, the announcement of the cabinet last night was seen as a provocation by everyone, including his own camp. And we had the Republican Party of Bruno Retailleau, who was reappointed Interior Minister, saying as soon as last night that themselves, even though they were supposed to be in the presidential camp, they were disappointed, especially with the comeback of Bruno Le Maire as defense minister. They were supposed to hold a crisis meeting in just 1 hour from now. That crisis meeting obviously is not going to happen because there is no government anymore. So there is no need to decide whether the Republicans will stay or not in this government. And perhaps that is what prompted this sudden resignation, because if you are losing as well the support of the center-right Republicans, which were already kind of hesitating over the weekend to join this government, you clearly lose the very fragile center majority you may try to build. So now the center-left clearly is something that, again, President Macron could look at, something he didn't do last time, 3.5 weeks ago, when he decided to choose Lecornu as Prime Minister, someone who has been a very close ally of President Macron since the very beginning in the first mandate in 2017. So what happens next is very uncertain. Will President Macron decide to go left, full left-wing this time, or will he actually decide to go further and present his own resignation?
Well, I guess that's another market shock, potentially, if that was to come through. And again, you've made the point, Caroline, that the President has reiterated he plans, of course, to see out the full term. But we watch for that as a potential additional risk event then over in France. Caroline, what do we watch for then in the next few hours and days in terms of how the President is likely to respond? And what happens in terms of the opposition parties and their reaction to this event?
Yeah, and we're going to watch that really closely. I mean, the first immediate reaction from the far left was obviously that Macron needs to resign, but we knew that that's something they've been already calling since the collapse of François Bayrou just a month ago. So now the interesting reaction will be from obviously the Republicans, center-right, and the Socialist center-left. What are they going to do? We heard from Olivier Faure, the first secretary of the Socialist Party, earlier this morning, just a couple of hours ago, saying that we don't really care so much about the casting, we don't really care so much about who is in this cabinet. What we care about is to respond to the French. What they want to see, for example, is a return of the retirement reform in front of Parliament. Of course, the next step, and this is something we're edging closer every day, is a call for new, fresh legislative elections. This is something that President Macron didn't want to do, but clearly with this situation, with a third collapse in less than a year of a government, he may have no choice but calling new, fresh legislative elections. The issue with that is that we would likely see a very fragmented parliament as well, pretty similar to the one we have today, with no one having the majority. Perhaps the National Rally would get a bigger share in Parliament, but not enough to get a National Rally majority. So we are clearly at the end of the road here for President Macron, and something else has to move, not just the Prime Minister.
Really interesting and an important update, of course, out of Paris. Bloomberg's Caroline Cornat in Paris. Thank you for the reaction, of course, the context, the analysis around that. Let's get more insights right now from the market perspective and bring in Sophie Hyun, Portfolio Manager and Strategist at BNP Paribas Asset Management. Fantastic to have you around the desk on this breaking news then, Sophie. What is your expectation in terms of the market reaction going from here, what they're watching for? I mean, clearly this was not priced in. If we look at the yield jump across the curve over in France, the sell-off of French debt, euro down, equities taking a big hit, the markets had not anticipated this one.
I think, as Caroline was saying, it's too early to have like a clear path on what's going to happen. As Michael was saying earlier as well, if you look at French equities, most of them, like I think 60–70% of revenues are generated abroad. So we need to look beyond the domestic problems. And something to keep in mind as well is we haven't seen yet any contagion to the rest of Europe. If anything, I think what's happening today in Japan is going to be a much bigger risk event for markets than the French elections.
Very interesting. Okay, so what's happening in Japan could be a bigger risk event for these markets. Just unpack that for us then, Sophie.
I think if you look at the new Prime Minister, as we're saying, Takaichi, the fact that she's in favor of loose monetary policy as well as like a more slower normalization of monetary policy, it means that you're going to have higher yield at the back end of the curve, as well as a weaker yen. That was not expected as well. So what I'm a bit scared of is what if the contagion effects of higher yield in Japan starts feeding into other DM markets at the point where having duration exposure at this point is a bit touchy at this point.
Okay, so we'll watch for that on Japan, and maybe we'll come back to that. But I just obviously want to get more of your views in terms of France and the risks that we're seeing. Is the next kind of scenario that we're watching for then in terms of how this is orchestrated? And Caroline Conard pointing out that possibly you get another round of elections, or possibly even the markets need to be thinking about President Macron himself resigning. On those two scenarios, what is the likely market reaction? How much sensitivity is there in these markets domestically in France to either of those scenarios?
I think to some extent, if we have another snap election, that's going to start feed into other risky assets in Europe, as in like contagion effect, and that's going to be a bigger event in my view, as in you're going to need to review why you're investing in European equities. But against that, I'm just wondering if it's not going to be good entry points at a time where, if you look at, we've been into 1.5 years of monetary easing, fiscal policy is expected to be loose, no tightening in sight, and then you start to have a consumer demand in China that starts to come alive through the equity market rally. So I'm just wondering if you take a step back, we have some risk in Europe to some extent. If we have snap election, is it going to be good entry points where, you know, the benefit from monetary easing is going to start feeding into the system, and actually you might have some kind of cyclical recovery in Europe?
Okay, so that is a constructive view on possibly some opportunity here. But you touched on something around contagion risk, which I think is really important, which is that if there are snap elections in France, that could cause some level of contagion into other Eurozone nations. Just unpack that view in a little bit more detail and what the potential impacts could be then from the market's perspective.
So for now, if you look at what's priced into markets, it's not as if the political premium has totally disappeared in France for the past 2 years. So if you look at the BTP bond and OAT bond spread, you always had some political premium in OAT bonds, so it's not really a surprise. The risk is if the political premium in France start feeding into other spreads, but also start feeding into euro, for example, and we see the reaction today. So that's all of, I think it's going to be all the stories about debt sustainability, potentially fiscal policy that needs to be tightened, which is not the case at the moment, where it's really on the other side of the... Look at Germany, for example. We're expecting a positive fiscal impulse next year. So I'm just... And I think if you think about it, it's not as if the outperformance of Europe in the second quarter really work, Europe versus US. So I'm just wondering, we're going to look at the Q3 earnings season in the US. We're going to look into the end of the year. What if we start to have earnings upgrades in Europe thanks to the weaker euro?
And maybe weaker euro will be something of a catalyst. That's been a headwind for European earnings. So you paint a scenario as well where potentially this is an opportunity and an opening for investors, either to add to exposure or get some exposure to European assets. What would you favour in that scenario? What would fit into that basket if indeed this becomes a value play and an opportunity to add exposure?
So in our portfolio at the moment in Europe, we're still holding Eurozone banks.
And you're comfortable holding French banks at this point?
At this point, we're not really doing any differentiation. We think that European banks have a fundamental story that makes sense. The fact that now the ECB is on hold probably cutting next year. I think from like a balance sheet and earnings standpoint, financials and Eurozone banks are still solid. I think what we've seen over the summer is really interesting, where if you look at stocks at 100 sectors, the sectors like basic resources, chemicals, autos, and more recently retail, you're starting to see analyst upgrades. So clearly some more, like momentum on the cyclical laggards that markets have started to pay attention at least last week.
Gold is getting another lift today, and clearly the gains year to date have been impressive, up almost 50%, closing in on $4,000 per troy ounce. Has gold run too far, or in an environment of political risk, is it an important hedge in your portfolio?
So we've been long gold for almost 2 years now, so it has worked like really well. It has played this duration replacements given the debt sustainability. But I think to some extent, the rally we've seen is also due to central banks buying. If you look at what retail investors have been buying, they have been buying gold as well. So overall, I think the gold story makes sense. Any fair value doesn't work anymore. Like if you look at some kind of regression on real rates, dollar, VIX, fair value is around 2,400. It's nowhere where it is now. Wow. So I think the bid for gold is here to stay. The fair value you could get doesn't really make sense. We see gold forecasts at 4,000, 5,000. I think in the trend context, and if duration doesn't work, gold is still going to be bought.
OK, Sophie, fantastic to get your views and analysis on a big day, of course, for French politics and the French market. Sophie Hyun, portfolio manager and strategist at BNP Paribas Asset Management. Maybe an opportunity as well. This could be an opportunity for those who want to take on some of that risk exposure in the French markets. Now to Japan and the election of a pro-stimulus leader in that nation, shaking up global markets, as Sophie was saying as well, sending the Nikkei surging and the yen tumbling on prospects for more government spending. Let's bring in Bloomberg's Paul Jackson, who's in Tokyo for us. Paul, is the market rally then sustainable? How short-lived will it be? It's been a pretty remarkable day for Japanese stocks.
Yeah, absolutely. I think we're still in the middle of the knee-jerk reaction to this victory, and I think how things play out over the longer term is yet to be seen. Why have markets moved in this way? As you mentioned, she's the pro-stimulus candidate. In particular, there's the view that she's very cautious about the Bank of Japan raising interest rates. In fact, last week she said that they shouldn't raise interest rates for the time being. So that helps feed into yen weakness. Yen weakness then bumps the stocks. The idea of extra spending also feeds into stocks. We've also seen the short-term government bond yields come down and the longer 20-year go up, both reflecting the interest rate prospects and also the spending that might come down the line. But we're seeing now what kind of team she's putting together to run her administration. I think the interesting thing that we've seen today is the floating of former heavyweight finance ministers like Taro Aso and Suzuki. And I think the signal that this sends is that she is going to be ploughing this line of, hey, I'm going to be expansive fiscally, but it's going to be responsible. So I think the first checkbox that this ticks is, hey, look, Japan is not heading towards some kind of Liz Truss moment. Yes, there could be more spending, could be more expansion there. The Bank of Japan may move more slowly, but this isn't going to be something off the charts. It's going to be a bit more measured, a bit more controlled. I think the second point to consider is that markets have been kind of lining up for a rate hike by the Bank of Japan at this end of this month, and it looked like the ducks were getting pretty much lined up for that. Now that puts Governor Ueda in a difficult spot, doesn't it? Because if he goes ahead now, that sends a signal that he's perhaps ignoring who we expect to be the new Prime Minister. If he doesn't go, then she's got too much influence over monetary policy. And what happens to the yen then? OK. Bloomberg's Paul Jackson on the ground in Tokyo with the context around
the person who could become the next Prime Minister of Japan. Responsible fiscal stimulus potentially is what's going to come down the pike. Paul, thank you very much indeed. Coming up, more reaction, of course, to the resignation of the French Prime Minister. That breaking news story, of course, all the reaction. The markets are moving on this. We bring you more insights. This is Bloomberg. Welcome back. So, France's Prime Minister has resigned. Monsieur Lecornu, next steps are known. Let's get the analysis now from Fabrice Potier, CEO of Rasmussen Global and former NATO Policy Planning Director. Fabrice, thank you for your time. Your reaction then to the resignation of the latest French Prime Minister?
Well, it is both shocking and not surprising. Prime Minister Lecornu had always this mission impossible to come up with a new formula, whilst he's obviously one of the closest, if not the closest, Macron-compatible politicians in France. So he was a keeper of the Macron economic doctrine, not giving ground on pension reform, and therefore could not have that kind of clean break from previous governments. And that was therefore always a bit of a mission impossible for him to put together something that he announced as a kind of brand new government, which actually, when you hear the names, was two-thirds recycling.
Two-thirds recycling. Wasn't it? I mean, Fabrice, was it not pretty inevitable, looking at the cabinet, that there would be a negative reaction from the Socialist Party and the National Rally?
Well, and I think also from Les Républicains, from the conservative right-wing party, which didn't see very well to see one of its former stars, Bruno Le Maire, to come back to the Ministry of Defense, whilst he was actually at the helm of the economic ministry when France was borrowing heavily and led to the current situation. So I think he lost on all the key fronts, both with the Socialists, le Rassemblement National, and Les Républicains. Now the question is really what's next? And what's next, I think there are two scenarios. One is the president triggers a snap election, which probably could mean, French people will have to go back to the voting booth and might actually end up with the same kind of parliament, or the president takes an even bolder step and offers le Rassemblement National, which is the largest party in the current parliament, to form a government, which will be a way to put this party, which is obviously highly controversial, in front of its own responsibilities.
How likely do you think that outcome is at this point, Fabrice?
I think all the crazy extreme outcomes are actually right now more possible because all the more reasonable mainstream ones have been exhausted. This is the third prime minister that Emmanuel Macron is putting forward, and clearly the experiment keeps on getting worse. What fundamentally I think is the reality is that there has been a rejection, that you agree with it or not. There's been a rejection of the Macron mandate and the Macron legacy, and therefore him trying to have a prime minister that is going to keep this legacy together is obviously a big tension from what French people have been asking for, which is a change and some reform of the previous reforms.
Fabrice, given that rejection that you outline, at least, to the Macron policy, the Macron agenda, how viable is it that he remains as president through 2027?
Well, again, all the crazy scenarios are probably a bit more possible this morning than they were a few weeks ago. But I think this is still a very remote one, given that he sees himself as the keeper of this French Fifth Republic. And therefore, he will not want to give away his position, which will be really the last straw breaking the camel's back, and definitely burying his legacy and his 7 years at the helm trying to to reform France. So I don't think he will want to do that unless there's really, I would imagine, a first scenario where you have snap election and you still have very inconclusive outcome like we have now, in which case France will be again stuck into a kind of limbo, and therefore there might be no other way than to have also presidential election. But I think this is still a second order priority.
And Fabrice, the different scenarios that you outline, and you basically message that we should brace for the unexpected to some extent right now. I'm not seeing on any of those scenarios necessarily a scenario where we get a lower deficit out of France and an adjustment in terms of what, a debt to GDP, or at least a deficit of a plus 5% by the end of this year, and a trajectory lower in 2026. It doesn't seem that that is now viable with these different scenarios, or am I missing something?
Well, I would say the markets will have to sit put until probably 2027, quite frankly. More than a year ago, we had the Prime Minister who proposed 60 billion euro of cuts. Then you had the second Prime Minister who proposed something like 40 billion. And then you had the third Prime Minister who just basically resigned after 3 weeks. So I think France is in political turmoil. It's time to acknowledge it and probably accept that the fact it's going to be like this for another year and a half until you can really address the fundamental political grievance of the French voters through both general and presidential elections.
What does this mean for France's domestic policy agenda and its international relationships?
The domestic agenda is obviously the most affected because at the end, this is what the government is about. And so what it means is that this is a status quo, but in a negative way because of the public debt level, the fact that you can't have a budget. And if you can't have a budget, you can't have spending priorities and saving priorities. So it's both bad for French people, for French consumers, but also for the markets. On the foreign policy, security policy front, I think this is a bit more protected from this turmoil for the simple fact is the French president under the Fifth Republic Constitution holds most of the executive decision powers on foreign policy. Therefore, as we could see, President Macron has been as active as ever on this front, and I don't think it will be fundamentally affected. Obviously, his weight on the international scene, including on the European scene, is affected.
Okay, Fabrice, really appreciate your time. Fabrice Potier, Rasmussen Global CEO and former NATO Policy Planning Director. Coming up, more on France with the CIO of Allianz, Ludovic Soubrun. That's coming up. This is Bloomberg. Good morning. Welcome to the Pulse. I'm Tom Mackenzie in London. These are your top stories. French Prime Minister Sebastien Lecornu quits after less than a month in the job. It comes a day after President Macron named a new cabinet that was broadly criticised. French stocks and bonds tumble, pushing the yield premium over German bonds to the highest level this year. Meanwhile, in Japan, the Nikkei soars and the yen plunges after Japan's ruling party elects Sanae Takaichi. The pro-stimulus leader is on course to become the country's first female prime minister. So European stocks under pressure as a result of the sell-off in France. US futures, though, pointing modestly higher by 0.3%. US stocks, of course, at record levels. The euro under pressure, falling 0.6% on the single currency at 116. French debt, the sell-off is there, yields up 7 basis points. So the sell-off has moderated to some extent, but the benchmark is at 358 right now on OATs. The French sovereign debt picture is there. And gold getting another lift, partly on the political uncertainty in France, but also partly on the continuing shutdown in the US. We are in week 2 of the US government shutdown. So politics certainly part of the mix for these global markets. Gold up 1.4% in the session, closing in on $4,000 per troy ounce. Let's get more now from the situation on the ground in France and bring in Jean Dalbat, economist at Bloomberg Economics. Jean, just get us up to speed in terms of the developments, of course, the Prime Minister resigning. Where does that leave your analysis as to the time frame in terms of how we think about sequencing for France and any potential budget, or is that impossible to forecast at this point?
I mean, it is pretty hard to forecast at the moment. The uncertainty is really, really high. Prime Minister Lecornu is expected to speak in 10 minutes on TV in France, and then we will wait for President Macron to make some announcement later on today. So it's pretty hard to forecast at the moment. We just know that tomorrow, under constitutional requirement, there's a need to have a budget at Parliament tomorrow. So that's the only thing we know. But it should be impossible for the next Prime Minister to do it. So uncertainty is pretty high, and we are waiting for more information to come.
Uncertainty is high, and we're seeing that reflected, of course, in the bond markets. How much further does this sell-off, do you think, have to go? Is this a knee-jerk reaction? Is there a lot of this risk already priced in, or are the various scenarios still key risk factors for the sovereign debt of France, whether that is fresh elections or even the possibility of the resignation of the French president himself?
So we think it is not a Liz-Truss moment, for example. It is a bit different what we are living in France at the moment. It is still a serious situation, but it is only a political crisis yet, and it doesn't look like a fiscal nor an economic crisis. What are the options ahead, as you asked? I mean, it will be for President Macron to decide. A resignation, we think it's pretty unlikely. So either he appoints a new prime minister or he calls for new general elections. But we don't think it will solve the situation because the political situation is so fragmented in France that even new general elections won't solve the problem.
Jean, I know you and the team work hard on putting out forecasts and analysis, of course, of the health and state of the French economy. How does this change things? I mean, the political uncertainty, we're just getting that underscored again today, but I guess on some levels it's not new. Does this change your forecasts for the growth picture for France?
So basically, the political uncertainty is the main impediment to French growth at the moment. It weighs on business and households' confidence a lot, and we think that the forecast will end up the growth will end up at 0.7% in 2025 and 1% in 2026. And that rebound in political uncertainty is a new risk to that forecast. We haven't updated yet, but it could change. It could change later on. And under our new modeling, it could trim up to 0.25 percentage point of GDP growth in 2026. So it can be pretty substantial for 2026. But at the moment, it isn't reflected in our forecast yet.
OK, the biggest risk factor for this French economy is the political uncertainty. Jean Dalbar, really important update, of course. Economist at Bloomberg Economics. Jean, thank you to you and the team and the quick reaction, of course. Let's bring in Ludovic Soubrun right now, Chief Investment Officer and Chief Economist at Allianz, for another take on this. Ludovic, what a day. I mean, how much surprise is there within the ranks of your firm? How much concern is there? I mean, is this a Liz Truss moment for France?
No, absolutely not. It's not. It's not a surprise either. Unfortunately, we've seen a bit the risks looming. I was still hopeful. It's the shortest serving prime minister in the Fifth Republic in France. So I think, gone too soon. That's what comes to mind right now. So is it a concern? I think the concern is what type of budget France is going to get. I mean, Jean explained the situation. It's not something where we are in crisis situation, but of course it means the adjustment speed for France will be longer, the uncertainty cost on growth will be higher. And of course, this is at a moment where Europe needs to get their act together on a series of policies. So having France being in that, corner where they have, no government to pass a budget is something that is not helpful, I would say. But, push come to shove, we're going to have a continuation budget. So it's going to be a provisional budget. And yes, we're going to still have 5% deficit next year. 2.5% debt servicing in GDP terms is not catastrophic. It just means we're dragging along at a moment where we would need to get our house in order much faster.
What would take France then from a political crisis to an economic crisis? You're pretty clear we're not there yet, and maybe we're not even close to being there. But is there a scenario under which the political crisis does metastasize into an economic crisis?
I mean, for international investors, I think resignation of President Macron would be something that could form an economic crisis. And again, an economic crisis that would mean an overreaction by market actors on the cost to lend to France. So a spread may be widening by another 50 or 100 basis points. That would be something that would consider a crisis. Why? Because it would trigger a conversation about what type of tools Europe needs to enact, especially the TPI by the ECB, or what type of discussion we should have at the European level with giving some slack to France, right? We are far from there, but as we know, this is something that happens in the market. I think another route through which France would be in danger zone would be if for the next 2 years, which is when the next presidential election is happening, we don't have any clarity on the economic policy toolbox and playbook. And I think that's also something that is possible. If we go, for example, for a technocratic government or a snap election with, as Jean described, a hung parliament with a minority government for Rassemblement National, right? That would be something also testing with the limits. Why? Because Rassemblement National has never been in power, and they are very bad when it comes to economic policies. And so they would have to find a way to accompany themselves with people that have a clue about economics, which is what other governments have done. So these two options of the decision tree are rather riskier branches. All in all, France, again, debt servicing to GDP is still 2%. It's half of Italy or Greece. So I don't see the issue. I just see the slow deterioration of our signature if we go this route. And so it could take a few years, but right now it would be less costly to act, for sure. So everybody's hoping for a political solution so that we can get on with things that matter.
Well, yeah, indeed. And look, if this continues for 1 or 2 years, Ludovic, what does that mean for the risk premium being priced into the sovereign debt of France?
Look, a lot more volatility for sure, and we've seen that already. This is one of the most volatile bond space that is there right now, especially in the European government spreads and bonds. I would say that 4% for the 10-year French is possible. And so that would mean indeed that little by little, we are creeping up to an area where the debt to GDP, the service of the debt to GDP is going to 3 and then 4%. That could happen very much before 2027. And then we are in the league with Italy and Greece. And of course, the rating could be migrated to even a lower notch. So that's, of course, the downside scenario that people need to watch.
Yeah, Moody's, the next update from Moody's is October the 24th. Just remind our viewers what that solution would be, Ludo.
Well, it's very clear. If we don't make any progress, then it will be higher taxation. That's the problem. I think the main risk is this one right now. If we cannot make an agreement on how we cut expenditures, of course, France has one magic bullet that has worked over the past crisis. If you remember 2012, when François Hollande was elected, it's raising taxation. And right now, there is 2 points of lower taxes that Macron passed that have not been financed. So, of course, the ultimate cost would be for the French savers and the French taxpayers. So it's going to be an increase of taxation again. So that's why having a solution now is much better. For the international investor, I'm not worried. The risk of default is peanuts, yeah.
The risk of default is peanuts. We heard from Sophie Hyun of BNP Paribas earlier in this show, and she was suggesting that there might be an opportunity, in fact, to get exposure to French assets at this point. It could be a buying opportunity. Would you be advising any international investors to dip their toe at this point? Is anything looking well valued at this point in France?
I think you need to wait a little bit more. So I would wait for a re-entry tactically that the spreads go up for another 70 to 80 basis points. So again, even 4% and above 10-year, I would consider it, a topic for consideration. 4.5, I would re-enter anytime. Because of course, then, you have every tool on the ECB is armed now to respond to this type of crisis. And so I think, we've learned our lessons for the past 15 years. We had a crisis. We made the Eurozone much stronger. Now we know we cannot tolerate much more stress. And because the contagion risk will be too strong, by the way, France's idiosyncratic risk will just spill over to the other countries. So, of course, I trust the euro to not be reversible, and I trust Europe to do whatever it takes, if needs be, to calm down any pressure on the financing of our sovereigns. We see that in the US, we will see that in the UK, and we'll certainly see that in Europe, yeah.
And Ludo, we're showing live pictures right now. You mentioned, and we've been hearing from our correspondent on the ground, our economist on the ground, Jean Barbar, talking about the fact that we're going to be hearing from the French Prime Minister. We're bringing you live shots right now, of course, and we are expecting the French Prime Minister to speak in the next few minutes, and we'll bring that to our audience, of course, live when that happens, Mr. Lecornu, on that resignation. On the contagion risks, Ludovic, what would trigger? When does this become a contagion risk?
Well, I think it becomes a contagion risk when people don't play collaborative with France. And this is why, for example, if we have some people in the international, in the political sphere in France have been, unsure about whether they want to get out of the euro, whether they want to pay their due to the European Commission, I think that would put us in a spot where there would be questions again about whether Europe is optional and a la carte. That would be bad. And so that would be a point where people then would question other countries. A form of uncooperative game also with other countries. I can imagine the Germans being like, oh, hey, there is a problem. You guys are not adjusting and we're still trying to find tax revenue to finance our defense expenditures. But again, Europe is not where it was 15 years ago. And so if I look at even parties like the National Rally come back on their euro stance. Clearly, there is a very collegiate approach between Germany and France right now, between Italy and France too, even though it may be where there is a bit more tension as we speak. Globally, I think there are very few concerns about the euro reversibility, but that would be, I think, where the contagion risk would be massive if we get into that corner.
What would bring the ECB off the sidelines, and what would the ECB response look like? Would it be rate cuts or another tool that they might reach for?
It can be a range of tools. I think the ECB will have to wait till the financial stress to be heightened and quite long, so they cannot be too early and too quick to act. So I think we're talking about yields of the French 10-year above 5%. And they could use the TPI, for example, the Italian yields are also above 6 or even 6.5%. So this is where the ECB would act. I would also see this would be a way for the ECB to act in a conditioned way. So without having the IMF or whatnot knocking on the door, we could have a situation where we solve the problem among ourselves instead of what we did with Greece, where the central bank was negotiating on the other side of the table, which was bad. I think it was the original scene 101 of the euro crisis. And then more importantly, we also have, I think, indeed, lower rates for the entirety of the eurozone. Inflation is under control and potentially also QE. I wouldn't completely, and this is TPI is a form of truncated QE. So the transmission policy instrument is a form of conditional, selective, and a form of QE that is supposed to be enough to ill quote Mario Draghi with an instrument that was designed after he left.
Ludo, just before we let you go, across the equity markets of France, we're seeing some heavy selling across the banking space over in France. I wonder, is there a case to look at some of those French names that have more of an international exposure in an environment, for example, where the Fed is cutting interest rates, where there is stimulus coming to play in countries like Japan, but also the US as well? Are those internationally exposed French names possibly looking attractive?
Sure. I mean, the bank is a good example of the so-called doom loop test, right? When we know basically that the French banks are less exposed than other banks to their sovereigns, right? But still, this is a play. This is not the first time that we see that the French banks are particularly reactive to whatever is happening on the political uncertainty. And on the opposite side of the spectrum, you're right. International companies exposed to, the fact that the trade war is only 10% of trade, the fact that there is better financing conditions globally with the Fed cutting. These companies are certainly bringing in higher earnings expectation that companies that are a bit stuck in the domestic market that would be affected by the cost of uncertainty. So indeed, I would be looking for sector rotation in the French equity markets and certainly looking at some companies that are in high capex intensive sectors, places where trade deals have been formed, and these companies are well placed in some of these markets, potentially the US and so forth, right? Yes, so there is an opportunity there.
Okay, sector rotation, potentially something to consider for investors exposed to France. As we look at the 10-year yield at 358, close to 359, yields up 8 basis points, and Ludovic suggesting that at 4% and above, you might want to start thinking potentially about getting exposure to the sovereign debt of France. Ludovic Subrin, always smart on the French markets and the politics as well that now interlap and interweave. Of course, CIO and Chief Economist at Allianz. Ludovic, thank you. We're bringing you live pictures, as we mentioned, from outside the Prime Minister's office in Paris. Sebastien Lecornu has resigned. We're expecting to hear from the French Prime Minister imminently, we will bring you that live, of course. Stay with us. This is Bloomberg. Welcome back. We are bringing you live pictures from Paris. The office of the Prime Minister, Sebastien Lecornu, is speaking now. We hope to bring this to you live. He has, of course, resigned, underscoring the political crisis in France. The market reaction is there. The euro is down. The sovereign debt of France is selling off, and the equity markets in France are down as well. The banks being badly hit. The French Prime Minister speaking. Will bring you the lines as they cross. We've been hearing as well from Marine Le Pen of National Rally, calling on Macron, the president, to dissolve the National Assembly. Clearly, this is one potential scenario for France right now. Elections could be in the cards. Nothing has been confirmed on that front, but clearly that is a potential scenario. Others, of course, have called for the resignation of the president himself. Previously, Macron has insisted he will serve out his full term. We are seeing and bringing you live pictures of the outgoing Prime Minister, Monsieur Lecornu, of course, the third Prime Minister in recent times under Macron, of course. He called those snap elections, and France has not been able to pull itself out of political crisis since then. French sovereign debt selling off, yields up 8 basis points on the benchmark 10-year at 3.59. Let's bring in Bloomberg's Caroline Conard on the ground for us in Paris, no doubt listening in as well to the French Prime Minister. So we'll ask for Caroline to juggle this act. Caroline, talk us through what we've been hearing from the Prime Minister and the rationale for him standing down.
Well, I'd love to hear what he's saying at the moment, currently speaking. I didn't have the return of his speech currently happening at the Prime Minister's office in Matignon. He's probably trying to explain exactly what brought his very sudden resignation this morning, less than 24 hours after detailing his cabinet last night, a cabinet that was widely seen as a provocation by the opposition parties, but not only, also within his own camp. The Republicans appearing very upset last night, for example, with the return of Bruno Le Maire as defense minister, and they are maintaining their crisis meeting later this morning to decide what's coming next. Of course, what's coming next pretty much depends on what President Macron is going to do. He has 3 scenarios. We're kind of back to square one. One scenario is to name, again, another prime minister, the 6th prime minister in less than 2 years, perhaps opening to the center-left, the Socialist Party, who have been saying many times that they want to join the government. And we heard from the first secretary of the Socialist Party earlier today saying that he was actually ready to give Lecornu a chance if the retirement reform would come back in Parliament, something that Macron has ruled out at the moment. Second scenario, of course, for President Macron would be to call new snap legislative elections, something that has basically prompted this whole political crisis. When he called snap elections back in June 2024, that's when the entire political crisis started. A lot of parties, including Marine Le Pen, the National Rally head, calling just right now for President Macron to dissolve the National Assembly. The far left as well calling for new legislative elections. Even people within the Republican camp, such as David Linard, the mayor of Cannes in the south of France, for example, saying just right now that Macron has no choice, really, between resignation and new snap elections. There is no room anymore to just name a new prime minister. That's not going to be enough to please public opinion, to please the oppositions. The only issue, Tom, is that new snap legislative elections would probably create a similar fragmented parliament into 3 blocks.
OK, Bloomberg's Caroline Conard in Paris. Caroline, thank you for that update. We see the French Prime Minister, of course, outgoing Prime Minister Sebastien Lecornu, continuing, of course, to speak outside his office in the French capital. We'll hope to bring you some lines from that when we can get them. For the moment, let's bring in, though, Bloomberg's senior EMEA market strategist Michael Masika. And Michael, we're seeing that significant sell-off across French equities and French banks really coming under pressure today. How do you see the equity story in France evolving in the days ahead?
Well, the reaction is the knee-jerk one. Like, you have more uncertainty building, you sell the market, you sell pretty much everything. Banks are being hit harder, and that makes a lot of sense because they've also been the best performers this year, not just in France, but everywhere in Europe. So you want to reduce your exposure to the country, they expose domestically, you sell those. It's kind of like expected. Now, you see, there's also other companies that are being sold like pretty heavily, like LVMH, for example. Those, they have very, very little exposure to the French domestic market. So it's kind of like just reducing your portfolio exposure to the country in general. And that's what's been happening for like a year now. I mean, the CAC is trailing the rest of the markets. French domestic stocks are trailing the rest of the market. It's just an ongoing situation. And we could have more of that over the next few months until that uncertainty kind of clears out, if it does.
Okay, and I want to get your forward view as well. But let's just meditate a little bit on what you said around the bank. So maybe there's some profit taking when it comes to French banks. They perform very well. Ludovic Soubrun of Allianz saying that he would suggest and recommend a rotation, maybe out of domestically focused French stocks into those international names. And you named LVMH as one of them. So that could be a move that we see, a rotation into some of those internationally exposed French names?
Yes, definitely. If you look at the performance of French domestically exposed stocks, they've been performing extremely well this year, just like the rest of domestically exposed European peers, because that's been the theme in Europe this year. It's like domestic exposure more than the international one. Why? Because you have the tariffs, you have China uncertainty, US uncertainty, and all of that pushed investors to invest massively into the domestic economy. And also in Europe, you have fiscal stimulus, you have the interest rates that are very low, much lower than in the rest of the world and in the US, for example. So the domestic exposure was like the main theme. So now you have obviously some kind of switch starting, and after like such a strong outperformance, you will have a rotation, yes. And you highlighted the fact that French stocks have been laggards. Does that story continue to turn in 2026? What do we need to see a budget passed, new elections? What gives French stocks the ability to catch up with their European peers? You have two things. First, the uncertainty is unlikely to dissipate. The problem is, even if there's a snap election called now, it's very, very unlikely that we get a very clear parliament. Like, where is going to be the majority? It's very tricky. So we might have more uncertainty on that front. What you could have is investors starting to buy dips. Just because French stocks are now undervalued compared to their European peers. They have some of them have a very good exposure, and that investor would want. So you could have a bit of that as well. Michael, fantastic. Thank you for your views and your insights, of course. Bloomberg Senior EMEA Market Strategist Michael Masika. We're going to leave you with live pictures. In fact, the outgoing French Prime Minister Sebastien Lecornu has just returned to his office. He's just walked back indoors, having addressed the media. We continue to keep across this story for you. French stocks are down. This is Bloomberg.